Saturday, May 10th, 1:45 p.m. New York time. Welcome back, investors, to Winning Wall Street's Money. Past Wednesday, the Federal Reserve met and they left interest rates unchanged. That does have an impact on the stock market, does have an impact on the Magnificent Seven companies. The other situation is tariffs. Tariffs have an impact on the stock market, and tariffs certainly have an impact on the companies, the Magnificent Seven. A lot of these companies have income mostly or in a large part from advertisement. If the products, services they have decline, marketing would decline, their revenue would decline. If businesses start to slow down, there's several things they cut back on. They reduce hours of labor costs. They lay people off to save money from labor, aka fire people. They cut back on advertisement. You might see that ripple effect more in other nations first. Yep, other nations also advertise on social media. Other nations, governments, civilians, companies also buy technology, lease, rent. Magnificent Seven companies, products and services. So here on the left is the watch list, the Magnificent Seven, at the alphabetical order. They are all part of the NASDAQ 100 stock index. Again, the NASDAQ 100 stock index is heavily weighted in technology companies. As well, these companies, several of them are in the Dow Jones Industrial Average, also in the S&P 100, as well in the S&P 500. So they are in several indexes. They represent large portions of those indexes. So when any one of these companies decline in price, it has a huge impact on the stock indexes. Looking here at the 5-year chart, each candle of the week. You ever hear of the term diversification? Don't have all your eggs in one basket. Well, if you buy single companies, you're heavily exposed to those companies. Some of these companies will not be in top leadership forever. They're full out of favor. Between mergers and acquisitions or going out of business. NASDAQ 100. Top right, horizontal line, that's the high of the year. That was this year. And the low of the year is here on the right. So currently we're below the high of the year. And look at this. For the week, we closed green. The candle made a higher high, higher low than the prior candle. Look at that little body. We closed back inside the range of last week. The bulls are underwater from the high of the prior week. Look, we're also very close to the swing high, this red horizontal line, SNR, support resistance. That's a key level. We haven't tested it nor broke it yet. Well, look at this. This red horizontal line above it says key level. That was a swing high, sold off, went up, broke above it. Last year went below it, and this year broke it, closed below it. So again, a lot of price action occurred at that key level or below that too. And here's an imbalance area. A lot of struggles on the upside. Again, the NASDAQ 100 companies, very diversified, versus just the Magnificent Seven. Let's go in the order of the companies now, see if they're going to perform equal or better. So again, notice this. This year, the NASDAQ 100 made the all-time high. This week, higher high, higher low on the weekly. Let's look at the individual companies, see if they're performing equal or better or worse. Apple, worse. Here's the high of last year. 2024, Apple's still below the high of last year. Think about it. It's performing worse, okay, since last year. Whereas the NASDAQ 100 better. Look at here on the far right, in the weekly. Apple made a lower low, lower high. It's performing worse than last week. Yeah, that's not good. Amazon, high of this year, high of all-time high here. Again, this orange vertical line is when Amazon got added to the Dow index. And look at the weekly chart. Higher high, higher low. Close at or above the high of last week. So it's performing better. Nice. Small trading range. Mm-hmm. Look again, key levels on the upside. Alphabet, aka Google. Here's a high of this year. And look at that. It made a higher high this week, taking out that inside candle and huge sell-off closing below last week. Yeah, it's performing worse than the index. Meta. Here's a high of this year here. Look how the weekly candle went. Higher high, higher low. Bearish pin bar, closing back inside the body of last week. Very suspicious. Mm-hmm. I mentioned this. If you haven't watched my video yesterday, Patreon members, that video on the 11 sectors of the S&P 500 showing what's occurring on those 11 sectors and what to be concerned about. Seeing quite a bit of those reflections on the weekly candles, such as this. Concern. Potential reversal. Microsoft. Look at that. Below the high of last year. Just like Apple. Not good. For the week, higher high, higher low. Almost back to the highs of this year. Small trading range. Small trading range. NVIDIA. Again, orange vertical line where it's got added to the Dow Jones Industrial Average. For the week, higher high, higher low. Way below the highs of this year. Small trading range past 2 weeks. Very interesting because smaller trading ranges, less volume on the upside. Yeah, there's not enough strength pushing it. So that would be what? Expect some kind of dump. Tesla, again, another company way below the highs of last year. We made a higher high, higher low from last week, small trading range. Yep, they're struggling up here. Well, those Magnificent Seven companies, majority of them were performing worse than the S&P, worse than the NASDAQ 100. I want to show you something else. Another NASDAQ 100 company, not part of Magnificent Seven, Netflix. All-time new high. Yep, all-time new high for the year. It's performing better than the stock index NASDAQ 100. And it's performing better than all the Magnificent Seven. Netflix. Wow. How times have changed from leadership. Thank you as always, spending just a little time with me. That's it for the video. Thank you for watching.